Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/The Smattering, to get access to the 10 best stocks to buy right now. Investors are trying to figure out, is 2023 going to be a bull market or a bear market? The reality is that we don't know, and anybody that's telling you they do is probably just trying to sell you something. But bull market or bear market, we do have a couple of stocks that we think 2023 could be a great year. I'm Jason Hall. This is The Smattering. Jeff Santoro is here with me. Hey, Jeff.
Hey, how you doing? Looking forward to this.
Me too. Me too. How about you kick it off? The stock you want to talk about, Airbnb. I'm a big fan of this one.
As I think about, what really impressed me about Airbnb as we went through this tough 2022 is, all of the signs were there for a slowing down in their business with, interest rates going up and people feeling pinch of rising prices at the grocery store and the gas pump. Airbnb did not really miss a beat. On paper, it looked like their year-over-year revenue growth had slowed, but you have to remember that was on top of really strong growth a year ago, so it was sort of difficult comparisons. But when you look down their metrics, nights in experience booked up 25%. These are Q3 numbers. Gross booking value up 31%. Gross booking value per night up 5%. So all of their, the growth metrics that they report every quarter are all heading in the right direction, despite what you could say is a worsening macroeconomic position. But what I really think is impressive beyond the actual results is they've really taken user feedback from both hosts and guests, and they worked actively to make the platform better. They do
relentless focus on product.
Yeah, and once or twice a year they do these big updates: the summer update, the winter update. And the last couple have really impressed me. The CEO came out and basically said the surprise pricing that people are experiencing is unacceptable, and they're making a move towards showing all-inclusive pricing, so you can really compare apples to apples when you look at two different locations. They've increased the search capabilities within the app, so some locations that were not coming up in search are now more easily can more easily be seen by potential guests, which will help hosts, which will encourage hosts. And they've upped their insurance policy, that the free coverage you get as either a host or a guest that covers, on the host side, it covers damage by guests in your home. And on the guest side, it covers, if you show up and the home is not what you were expecting. So the strong results in facing headwinds, I think, is impressive. But really, it's the constant feedback from users that gets implemented into new features that I think is going to carry the business through 2023 successfully, whether we see a continued bear market like we did last year, or things turn around and we see a bull market through the year.
Jeff, I want to talk about Lemonade here. This is a stock that was certainly persona non grata last year. It's had a great run to begin 2023. The stock has, but frankly, it hasn't gone up on any news about the business. Let's go back a little bit in time with Lemonade. When it first came public, I was very bullish on the business, very interested, but wasn't in a hurry to buy the stock because I wanted to see them prove that they could actually insure very well, right? We know their AI is really great for people coming to try to get a policy, for filing claims, things that can happen in minutes, right? You can find out if they're going to offer you a policy in minutes. You can find out about a claim in seconds. It's incredible what they do. Some other things that they've built to remove the traditional friction between people with policies, policyholders, and the insurers with actually paying claims in a reasonable amount of time. Their net promoter scores are very, very, very high. But Jeff, what we've seen over the past year and a half is they've not been very good at underwriting insurance, right? If you look at their losses, their loss ratios are far higher than management says their goals are. And frankly, they're at a point where they don't leave any money left to actually cover running the business. And that's really, really concerning. But I'm very optimistic thinking about all of the other great product things that the company has done, that Lemonade has in place. And the evidence is really clear that customers like those things. If you look at their growth rates are off the charts. So if you think about the acquisition of Metromile, right? So now it's brought that business in and it's trying to integrate it with its other insurance operations. It's expanding its homeowners insurance business. It's at a point now where it can really just kind of focus on scaling those. And honestly, I really feel like it's going to be easier just to find the right people to help it build the right insurance models, to get the underwriting right. If they can get that right this year, I think the stock is going to just absolutely go on a tear. And insurance is the kind of thing that it should do fine across any economic environment.